Jam. I am Big Cheds. I love you guys. What's today? It's Saturday, November 20th, 2021. It's a great year. It's a great day. We're going to talk crypto. We'll talk Bitcoin. And I'd like to really make this, I'd like to try to make trading a little bit more simple for you. You know, it's so complicated. There's so many ways to do it. That's my job, is to try to make it a little bit more simple for you. I enjoy what I'm doing. I'm having fun with it. And, so let's just get this party started. Let's see. I've got everything looks pretty good on my end. I'm just checking everything over there. Make sure we're good to go. We are good to go. So we'll start out. I want to remind you, you can find me. I am on Twitter. Let's get that out of the way. I'm on Twitter. I'm at Big Cheds. If you don't know me, I'm kind of a newbie helper. I'm a chart nerd. I've been doing this for a long time. When I get started, I got wrecked so many times, and I started to learn some different tricks, some ways not to get wrecked. Eventually, that led me to, I put out a blog, chedstrading.blogspot.com, and then eventually I put a lot of that into my book, Trading Wisdom, 50 Lessons Every Trader Should Know. All right, it's a great book, Trading Psychology, Risk Management, Basics of Technical Analysis. You can find that on Amazon right now. The reviews are amazing. The feedback's been amazing, so thank you to everyone for that. There's a Kindle, paperback, and hardcover edition, and I'm getting ready to publish the Audible version. Audible version will be out by Christmas. I want to go over some free stuff, though. That's the book. If you can't afford it, some people can't afford it, or like their country, they can't buy it for some reason, whatever reason. I've got a free version on my YouTube channel at Cheds Trading. Obviously, you're here now, so please hit like on the video, hit subscribe. And I've got a playlist. Let's see, Trading Wisdom, 50 Lessons Every Trader Should Know. I'm doing one video, one lesson every few weeks. I'm going to do a new one on Monday. We'll do lesson 9. What's lesson 9 off the top of my head? Last time we did Don't Marry Your Bags. Lesson 9, profit taking. That should be really fun. We'll do that lesson 9 next week. I also do a weekly show on the Crypto Banter YouTube channel. Go there, hit subscribe, give that love to the Banter family. Check out the Trading Wisdom playlist. I've got 11 episodes, or the team, we have 11 episodes available for you right now. Check that out. I mentioned, this is kind of a master class, and I'm going to really teach you some premium level educational stuff. I don't do these very often. This is like number 3. This will be the 3rd one I've done in a long time. And the reason for that is I reserve my analysis for Bitcoin Live. I'm a founding analyst at Bitcoin Live. It's the best-in-class educational platform for crypto. And I do this basically twice a week on Bitcoin Live. So if you're interested in that, hit me up on Twitter. Check out the details will be in the video description, of course. But you're not here to, hear me talk about myself. You're here, we're going to talk about Bitcoin and crypto. I want to teach you some tricks. I want you to feel comfortable. Reach out to me in the chat room. I see you guys there. I want to say hello. I love you guys. I see the comments. Robin says, can you please ask Peter Schiff to tweet again? I will do that. And thank you for the super chat. I appreciate that. It was funny. Peter Schiff seems to tweet at all these market bottoms. So I'm pretty sure if you kind of overlaid his tweets, he would have tweeted right at the bottom, of all these movements. So let's see. What's up there? B Addiction, Laura, Kevin, Mr. Kush, Kali, Peter. There's a lot of you in the chat room. I'm loving having you here. I'm going to get to your request kind of towards the middle part of it. After I do Bitcoin, I'm going to jump right into the chat room. I want to try to help you and look at whatever it is you're trading. But I'm brutally honest. If your chart sucks, I'm going to tell you. I don't sugarcoat it. I think honesty is best. As a general concept, you want to be playing strength and not weakness. Let's jump into Bitcoin. And by the way, so go back and watch the other 2 master classes. And I talked a lot about how we got to where we are now. I talked about how we got up to that 64K top. I talked about how I talked about the 64K top and the warning signs. And then I talked about the last one. I talked about kind of this 52K top and how we were anticipating that lower high and kind of a pausing of the price action. And this time, I'm going to talk about how we knew that this was a local top. How did we know that Bitcoin was about to slow down? I'm not saying it's over. I'm not saying it's a bear market, because that's crazy talk. But we've dropped, 18, 19%. That's a pretty nice, healthy retracement. And it's healthy, by the way. But how did we know? There were warning signs. People will throw up their hands and say, there's no way we could have seen this coming. Well, guess what? I have the receipts. Okay, I have the receipts. I'm going to go over them later. All the warning signs, November 9th, Thought experiment, LTC, EOS, and BCH are pumping. And for those who are new, LTC marks the local top. We'll kind of get to that, right? I've got the receipts, so we're going to talk about that, how we knew the top was coming. But let's slow it down. You're new to trading. What are we looking at? So I've undressed the chart, right? It's simple. It's just candles here. These are Japanese candlesticks, and these have been around for hundreds of years, originally used to trade rice futures, kind of in feudal Japan, which is kind of fun. They've been around a long time. All Japanese candlestick signals are short-term signals. Hopefully, kind of through the process of this video, I'll find some opportunities to kind of show you some of these chart symbols. I've got a nice little library here. I can pop up, oh, there's a shooting star. Oh, here's a hammer. So hopefully we'll get some opportunities to do some, really nice Japanese candlestick educational stuff. So weekly chart. So for a Japanese candlestick, you have 4 data points. You have the open, you have the high, the low, and the close, right? And it's different on a green candle and a red candle. So we'll take this week's candle. We still have a day left, right? So we have a day plus 7 hours. So on this candle, all right, we have the open in the upper left-hand corner, right? That's the open. The red guy, the red arrow is not quite doing it, but the open right there, upper left corner, close bottom right corner, right? High of session, that upper wick, low of session, that bottom wick. Basically the same for a green candle, except you open in the bottom left and you close in the upper right, right? So you have the open, the high, the low, and the close. Those are Japanese candlesticks. So candlestick signals are about context. You want to look at a candlestick, where it's trading in relation to prior resistance or prior consolidation clusters. All this price action here, we want to keep in mind all this price action here is in the context of being right near that prior all-time high. So that's some context. But like, how else do you add context? Volume, right? So we'll go one at a time here. We're going to add volume. I've added volume. Volume is really important, okay? And volume is incredibly misunderstood as a concept. And we'll get to that later. I'll find opportunities to kind of express that and kind of address or explore that topic. But volume is really misunderstood. You see the most volume at the top and the bottom of a chart, usually not in the middle, right? That's because when a trend is already moving in a certain direction, you already have an imbalance in the supply and the demand. So it's already moving, it's already got momentum, right? And then when the price comes to a critical level, you have a battle, right? That's where the volume comes, when you have a battle and the counter trend force is attempting to kind of get control and take control of the momentum. So you get the most volume at the top and the bottom of the chart. Also, with any kind of consolidation pattern, you usually have the most volume at the beginning, and then it will slowly trail off until the pattern completes. You'll find plenty of examples of that today in today's class, today's masterclass. With Japanese candlestick signals as well, every signal is based on the strength. The volume behind it tells you the strength of that candlestick signal. So when you look at a Japanese candlestick signal, you want volume, right? So like on a bullish engulfing candle, let's see, let me try to find an example for you what I'm saying. Engulfing, engulfing, bullish engulfing. Oh, here we go. And open that up here. We'll open that up. Let's see, picture viewer, photos, try it that way. There we go, bullish engulfing candle, right? Where the second candle, that candle body, the real candle body, not the wicks. So for a bullish engulfing candle, for the strength of the signal, you really would want, ideally, at least 1.5 times, preferably twice the volume on the second candle compared to the first candle, because that would give you more confidence that that trend is maybe reversing, right? You wouldn't want all the volume on the red candle and then a little volume on this big green candle, because that would mean it was kind of an artificial green candle. It was an artificial price movement, right? So volume is critical. Volume, volume, volume. So we've got the Bitcoin weekly chart. By the way, incredibly bullish. Bitcoin weekly chart is incredibly bullish, okay? How do we define what's bullish and bearish? Let's pull up the 200 period simple moving average. A simple moving average, there's 2 main types. There's all these other ones, geometric and all this other stuff you don't need to worry about. But you want to worry about a simple and an exponential moving average, right? A simple moving average means that every candle in that period is calculated with the same price weight. Okay, every candle in that period is calculated with the same price weight. Oh, thank you so much, I can't pronounce your name, AOIZ, but thank you. Every candle in that period is pronounced in this has the same price weighting, right? A simple moving average. 200. How do we know if it's a bull trend or a bear trend? With a rising 200 moving average is a definition of an uptrend, and you confirm that with the price trading above that. That's how you confirm it's an uptrend. Okay, we'll find examples of that as we go forward, but other examples. So that's it. We have an uptrend on the weekly chart, period, point blank, end of discussion. All right. What's another type of moving average? How about an exponential moving average? All right. Here's the green line. I use the 8 period exponential moving average. What does that mean? Exponential means every candle so the most recent candle has the most price weighting, right? So the most recent candle has more price weighting than 5 candles before that. And then, starts at that first candle and it slowly goes less and less. So it's more sensitive, right? That's why you want to use exponential moving averages for short-term price action. Some people use them for 50, 100, and 200. For me, it doesn't make sense. You find, hey, what works for you works for you. If you're making money, that makes me happy. But for me, for my money, for my style, my methodology, short-term moving averages can be exponential. That's why they make sense. They're more sensitive. Longer, like a 200 EMA doesn't make sense to me, right? But a simple moving average makes sense for the 200. Short-term, 8 EMA. And now 8 EMA is really interesting. You'll notice in a lot of uptrends, kind of especially after they break out. And we really covered in detail, in exhaustive detail, kind of that recent breakout in Bitcoin, kind of what the triggers were, the breakout really from like 10 to 60, 70K, and kind of what the confirmation levels were, kind of the diagonal break. And you had this kind of lower high structure that was then broken as well. August 30th, you came back, you did a bullish retest, what's called the throwback. I'm not going to go too much detail about that, but really after it broke out, look what the price is doing. It's accelerating, and on these pullbacks, on these little retracements, it's finding support at the 8 EMA. So it's a really clean, really clean way to trade a strong uptrend, to look for a dip buying spot. I should have said this before, but your job as a technical analyst is to identify the trend and then ride that trend as long as it's profitable. And while you're doing that, you're looking for signs of the trend either strengthening or weakening, right? That's what your job is as a technical analyst. And we have a strong trend. You can identify that trend. And so what do? You don't just ape in. You don't just buy in randomly. You want to buy a dip. You want to buy a dip in an uptrend. That's your job. That's in your job description, okay? That's what it means as a trader. Find the trend, find the uptrend, buy the dip in the uptrend. That's 8 EMA. Works beautifully. It also gives us potential warning signs. We can observe here, we have that first close below, April 19th week, first close below the 8 EMA. That was a warning sign. It wasn't like a sell everything warning sign, but it's a sign of weakening trend strength, all right? TA is not so much about predicting. I get all these questions on Twitter, and by the way, thank you for the interactions. Thank you for the feedback. Thank you for all the wonderful feedback. I really appreciate that. I get a lot of questions. Where do you see, pick a name. Where do you see Luna in 5 months? It's like, who can answer that intelligently? What is the point of that question, right? For me, it's there's no point in that question. How do you know 5 months? Ask me in like 4 months, 25 days or 20 days. You need more data. You need to know what happens between here and there. Nobody can know. So you can't predict the future, but you can observe the trend and look for signs of strengthening and weakening. 8 EMA, that's your bellwether. What's interesting as well is we're going to add the Bollinger Bands. The Bollinger Bands show you when there's volatility. They give you a sense of overextended movements. They allow you to give you a position for your Japanese candlestick signals. I'll explain what I mean here in just a moment. But if you'll notice, in these strong uptrends, you get that price movement from the 8 EMA to the upper Bollinger, 8 EMA, upper Bollinger. Look at that. Gorgeous, gorgeous, gorgeous. That's in those moments of the strongest uptrends, when they're really accelerating. You see that, okay? So I'm using the Bollinger Bands. I'm using them in a couple ways. You'll notice here the Bollinger Bands were kind of tight. So after these periods of sideways consolidation, we'll see it on lower time frames. I'll show you in other things. I keep promising to show you things. I promise I will. When they get really tight, that's suggestive that volatility is around the corner. So when you get a signal like this, the tightening Bollinger Bands, it means, all right, I want to pay attention. I want to be watching. I want to kind of see what things are going on. I had a question from someone in the chat room. Robbie, Prime BXT, their chart for the BTC weekly month, they're showing gaps just filled, gaps in other charts. I'll get to that in a moment. So Robbie, your question is about, can you help me with something? Prime BXT, their chart for BTC, and their weekly and monthly are showing gaps. So you don't have gaps in crypto. It's a 24/7 market. You can still use Japanese candlestick signals like a morning star, evening star, that type of thing. But like futures will have gaps. But when there's a 24/7 market, there should be no gap. I don't use Prime XBT. I don't know why they're using gaps. Where can you find? Why can't you find those on other charts? Because the other charts don't have gaps. There's trades every second on Bitcoin, I believe, if not more than that. So, I hope that addressed your question. I don't know why there's gaps on Prime XBT, Robbie. Bollinger Bands are tight. They're squeezing. They're suggesting we have some volatility, and look what happened. We had a nice price movement from that point. How else can we use the Bollinger Bands? We can use them in concert with our Japanese candlestick signals. This is a very classic example here. We have a hammer. Right? What is a hammer? A hammer is a small real candle body. That's that open and close with a long lower shadow that needs to be at least 2 times the length of the real candle body to qualify. So we'll pull up a hammer as well in my example. Let's see. Here we go. Hammer. That's a hammer candle. So you want a hammer candle at the right place. Like a reversal candle needs a trend to reverse, right? So you want a bullish reversal candle after a big downtrend, right? You want it in a position where it makes sense. Hey, we're reversing the trend. You wouldn't want a hammer kind of in the middle of the channel at the middle Bollinger, which is the 20 period simple moving average. You wouldn't want it here because you're kind of in the middle of the channel, right? You want to go long at the bottom of the channel. You want to make a move maybe at the top of the channel, but not middle of the channel is chop. All the signals are kind of choppy. So you want to look for an ideal situation. An ideal situation is a hammer candle, ideally maybe with a little more volume, but it worked out really nicely here. We'll go into the daily chart more about this formation, the 80-day rectangle. But a bullish reversal candle you want at the lower Bollinger. A bearish reversal candle you want at the upper Bollinger Band. So that's how you use your Bollinger Bands. All right, I'm kind of walking you through my setup. I get a lot of questions on Twitter. Why do you use this EMA? Why do you do that? And I say, hey, go check out my pinned YouTube video. So this is the next one, and this is the explainer. So I'm walking you through the setup. We have volume. This is a moving average of volume. It's kind of an average over the last 14 sessions. Not necessary. You don't really need that because you can kind of eyeball it. But it gives you a sense when there's more than average volume, certainly at a key pivot point that might give you a clue in terms of what the trend may be doing. And so we have the 8 EMA, the green line. Now we have the yellow line, the 34 exponential moving average. You can use that, kind of as a secondary uptrend, right? So I often talk about 8 EMA as primary uptrend. And it's not that well illustrated on this specific chart because the price dipped below and it's not really respecting that yellow line. But oftentimes, that will make a nice buy the dip entry, that kind of secondary uptrend, that EMA 34, EMA 34, that secondary uptrend support. That's an excellent tool to use kind of as a buy the dip level. I'm going to show you on the daily chart a better illustration of really the MA cross, the 8 and the 34. I'll get to that in just a moment. But what we want to talk about on this weekly chart for Bitcoin is the MA50, the orange line, the simple moving average, okay? So we're looking for data points, right? We're looking for data points back when Bitcoin was hanging around 30K and that 80-day rectangle, right? What does that mean? Well, this is a weekly chart, but essentially we were trading in a rectangle, right? A clearly defined upper boundary and lower boundary for 80 days. The price never closed below the orange line. And had it, that would have been the first time it closed below the MA50 since about that 8K level. So that was a key pivot. A lot of people were watching that. So we have the orange line as your buy the dip level, buy the dip level, buy the dip level. Price bounced nicely and set the higher low. We'll talk about how that happened, why that happened, why that matters. And after it set the higher low here, the lower high, I'll have to slow down so I'm more precise. After it set the lower high here, where did it find support? MA50, 50 period simple moving average. Okay, so we have the 8 EMA, we have the 34 EMA, we have the 50 simple, and we have the 200 simple. We also have the brown line, which is the middle Bollinger Band. It's a 20 period simple moving average. We'll look at these moving averages as well in the daily chart, but what I want to talk about on the weekly chart is the fact that trends need to digest, right? So you don't really want, unless you're one of those sadists, you don't really want to go straight up, because if you go straight up, you're going to come straight down, you're going to crash. You want to have kind of a consolidating move, a steady move, a stair-stepping move. What does that mean? Kind of come up, you consolidate for a while, maybe you come back, you break out a little bit, you come back, you find support there. You do it again, you come back, now you find support there. Boom, you come up again and you found support there. So you're stair-stepping. You're creating these levels of support. You're turning prior resistance into support. This is a very important complex. So if you're new to trading, find an uptrend, find a prior high, and once you break above it, look to buy on that first retest of that level. I'll show you examples of that. In Ethereum, for example, illustrates that quite well. So what happened here on the weekly chart? Let's go daily. Let's get a little bit more granular here. So what happened on the chart? So 64K top. We did the kind of head and shoulders here, right? We had the head and shoulders, shoulder, head, shoulder. You can draw what's called, so with the head and shoulders, what you have is 3 thrusts, right? That middle thrust is higher. It's a very well recognized pattern. You can see it. Most people misplay it because they act on it too early. The key with a head and shoulders is you do not act upon it until it confirms. It confirms when it breaks through the neck base line, right? This one's a little bit debatable where you draw that neck base line. Do you draw this kind of horizontal line? Do you draw some type of an ascending neck base line like there, and you kind of extend this? You can say, well, this is my left shoulder. It's either a wide left or head and shoulders complex. You know, I think for our sakes, for the point of this, we're going to keep it nice and simple. Head and shoulders, here's your neck baseline. You play it once it confirms, okay? Here you faked out. You got faked out. So how do you play a fake out, right? So let's say your whole thing was, I see a head and shoulders, I've read some textbooks, I've played this before, and I know when it breaks below the neckline, you know, I'm out. At this point, it wasn't quite a head and shoulders because it hadn't formed hadn't formed that right shoulder yet. But let's say you just played simply, you played this break. You just played the horizontal break, okay? You just played the horizontal break, the loss of that kind of 30, what is that, of that, 52K area. Say you went short here. If you go short here, once you're in a little bit of profit, slide your stop loss down into profit. And then when the price bounces back up here, guess what happens? Your trade thesis has been invalidated. Anytime you enter a trade, and the reason for the trade fails, get out, okay? Don't sit there. Don't hold on to trades just because you thought it was going to work. Don't hold on to trades just because you thought it was going to work. Manage your risk. Your whole job is to define your risk so you can keep trading and you can survive, right? So if you had, this is a little fake out. You played the short, you got faked out, you closed the short, it broke right back up above it, right? Then we formed the right shoulder, and then we confirmed. We confirmed here May 12th, May 13th. Before we confirmed, we had warning signs. Let's talk about the warning signs. I talked about it in the last video, but let's look at the daily MA50. Look at the orange line, right? And we'll notice that the price had respected this daily MA50 for quite a while. So we had not touched the daily MA50 since October 2020, right around that 10.7 level. All right. And what happened here? It bounced, came back, came near the MA50. Bounced, came back, touched the MA50. Bounced, came back near the MA50, right? And then here, touched the MA50. So what happened? This whole time, we're in the mode of the trend that's so strong, it's not closing below the MA50. And then all of a sudden here, whoops, right? April 19th closed below the MA50. So that's a warning sign. It's a data point. It doesn't mean sell everything. It just means pay attention. It means pay attention, right? Because you have a warning sign at that point. So we have the warning sign because we have the close below the MA50. That came after what's called an upthrust. And I apologize if this is review. I've done it many times, but for some folks, you've probably never seen this before. And by the way, please hit like, please hit subscribe. We had the upthrust. Before we closed below the 50, we had the upthrust, the false bull break. When you establish a resistance level and you break up above it, but you come pretty quickly right back below, that's a warning sign. We actually have this happening right now with Bitcoin. I'll go over to it, in a moment. We have that right here. You see that? Up thrust, right? We had the up thrust. So you should have been careful when you saw that, right? You've seen my videos, you've seen other people's videos. You understand the concept of an up thrust, right? Well, let me just do it this way. You have a resistance level, and let's say you establish it, you reject. Ideally, you further establish it, you reject there again. It's a really strong level. Wow, we keep rejecting. Boom, we break out. But then what happens? Whoops, we're right back below that. You take a short right there. You take a short, or you move up, you take profit in your long positions, because that's a big warning sign. So we have the up thrust. Now we have the close below the MA50. And as I promised earlier, and now I'm going to make good on my promise, we have the 8 and the 34 EMA action here. So let's take a look at that. I talked about the 8 EMA, the exponential moving average, and I have the 34. So moving average crosses. First of all, you need a trend. You need a trend to reverse. So if the price is going sideways and you have a moving average cross in a sideways market, that's a muted or a weak signal. You can pretty safely ignore that, okay? Here we have the price accelerating. I talked about the breakout. We talked about the diagonal and the horizontal break back in, September 2020. Price accelerates, cools off a little bit. The green line comes back, doesn't touch the yellow. Bounces again, comes back, doesn't touch the yellow, right? So we're seeing a really strong uptrend, and we're seeing every time it's getting close to a crossing signal, bulls rally. Getting close, bulls rally. Getting close, bulls rally. And then, whoops, we get our first EMA 34 cross, right? Bear cross. It attempted to recross, but it flattened out. So this is kind of a rejection of the bulls kind of get that momentum back up, right? So we have here the warning signs. We have the up thrust. It's a lot of replay for you folks. I know, and I'm sorry, but you have the up thrust, MA50 close, and the EMA 34 bear cross, right? Then what do? You set a low, you set a high, equilibrium, a high, a low, a higher low, and then somewhere in here, bulls were expecting to rally, and then maybe break out, right? What happened? It happened, and we continued further down. So you set the lower high, and then you flushed, right? So that was a 64K top, all right? So now you kind of see a little bit of the basics of how we got here, kind of what I use, how I use it, all that good stuff. So what happened there? We broke down, and then boom, below the MA200. We weren't actually like in a downtrend because we still had a rising MA200. So we had essentially an unconfirmed downtrend at this point. The price dropped all the way down, and it broke below a very important key level. So we had that really key level here of 42K, the January highs. I'm going to illustrate this horizontal for you because it's an important horizontal. Highs of January. I've done this a million times. I keep doing it. Highs of January, lows of February. We broke through, and we're in this rectangle, the 80-day rectangle. I keep saying that. Well, what do I mean? Cheds, what do you mean 80-day rectangle? Right there. Basically, we're in this range, right, for 80 days. And initially, so you always look at, and we'll look at this with altcoins. And when we're looking at altcoins now, and when you are doing your scanning, look at that May high, right? After the price drops, it bounces. You get that dead cat. You get that relief rally bounce. And that sets a high. That gives you a pivot point. It gives you something to watch. You always want to pay attention to highs that are made after a drop, right? Highs that are made after a drop, okay? So the price drops, highs made there. Bounces again, highs made there. So now you say, okay, let's clean it up. Now you say, all right, I can see what's going on. I can say, all right, we're definitely consolidating. I'm going to wait till I get back up above this high to go long, 42, 43K level. And, you'd say, well, that makes sense also as well because that was the low of February and the high of January. So you're identifying a key level, a key pivot. And you say, I clearly see in the bigger picture, the big bounce up above this level, all this trading, down below it, the consolidating here, and you say, I want to be back up above this, and I want to ride the momentum, once we're back up above this. And had you done that, and had that been your whole strategy, you captured that momentum here, 42K, and you rode that for, 50% gain, right? Well, you say, wait a minute, Big Cheds. I don't want to wait till 42K. So that's fine, right? There's two clean ways to trade. And of course, this is all in my experience, my opinion, right? I'm not telling you I'm the best trader because I'm not. I'm only telling you what I know, what works for me, what I've read, what I've studied. I'm CMT level 1, Japanese candlestick, classical charting, trading psychology. You either want to buy a breakout or you want to buy some type of a support retest. All right. Wow, Paulie, thank you so much. Really appreciate that. Much love right back to you. You either want to buy the breakout or you want to buy like a support retest. Okay. So we talked earlier about the concept of an upthrust, right? What was that again? Let's review it. We talked about an upthrust, a resistance established. You break up above it and you come back. An upthrust, a false bull break. How about what's the opposite of that? That's a spring, a false bear break. So on the bottom of this channel, pretty much we had a really nicely established support level at 30K. This low, kind of right in these lows as well. And then we had a temporary spring or a false bear break. Price broke back up above it. Once it did that, I was thinking, listen, above 30K, you're good to go. You know, if you had bought down here, let's say you had bought that blood around 30K, you would have said, my stop loss is going to be 30K. As long as we're above 30K, we're okay. All right. The price rallied and it was rejected, right? You had this kind of descending supply or descending resistance. Price came back down, and look what happened again here, July 20th, 21st. All right, and I took a lot of heat for being bearish right around here when we were like 32, 33K, because I'm thinking, listen, like, I think as long as we're above 30K, we're fine, but, you know, we're heading lower, we're probably going to head lower, and we flushed, but then we recaptured it. So you always pay attention to when a level is flipped and then you regain it. And here we had the spring, right? So you could have, if you were sitting on your hands, which is good, you want to sit in your hands, wait for clean signals. You know, if you can't tell what's going on, do nothing. That's a great phrase. That's a great strategy and philosophy. But you could have observed, let's clean it up. You could have observed the price broke below 30K temporarily. And you would have said, oh, went to 28.5, you know, the run's over, we're going to 20K. But then once it got back up above 30K, boom, you're paying attention. You can buy there or you can wait a little bit. Then we had building bullish momentum. 8 EMA flipped into support. Retest there, retest there. Now we have 1, 2, 3 closes above the EMA 8, right? Find that in here. You had that a little bit. 1, 2, 3, 4 closes. You're starting to get something going. Okay, you say, well, those closes aren't enough. I want some more data points. And you say, all right, EMA 34. I've noticed the price rejected here at the EMA 34. All right, so I'm watching here. And then boom, real nice clean close above the EMA 34. And then boom, daily MA 50, that orange line. So we got our first close above the MA 50 here at 35K, right? So that was a bull signal. The bull signal that corresponded not only with some type of a minor diagonal break. And by the way, be careful structuring your trades on a diagonal break because you can break it and come back and retest it all the way down to 0. You want to use it in concert or in combination with some type of a horizontal or lower high break. You got that here. So you got all types of bull signals and buy signals right here around 34.6, 35K. When the price rallied and broke that high, you're long. You're ready to go long. You know, you had a real clean setup and boom, the price came up, broke the top of the channel, came back, kind of chopped you out. Real hard to play here, I'm not going to lie. But then it reaccelerated and you got back up above that high, 42K, 43K, and you were ready to go. So you either paid attention at the bottom of this 80-day rectangle, you bought the spring, or you waited for confirmation, you waited till the price was above 42, 43K, that key horizontal, yada, yada, yada. That's the price history. That's how you traded that. That's how we got to where we are now, all right? So how did we know, and we've talked about this, check my last video, check my Twitter feed, how did we know we were going to kind of slow down here at 52, 53K? Well, if we look back to this top, and let's think about 64K top, and let's think about market cycles. If you notice, I put out a tweet, I don't have it here, but it was around this time, and I said, too much enthusiasm. That was my tweet. That's all I said. Everybody was nuts. We're going to 100K, we're going to... I mean, back here, if you had polled people back in April and you asked them, what's the high of the year? They would have said 150, 200, 300K. I mean, people were nuts, right? People were nuts, but it was too high, too fast. And you noticed the minor altcoins were rallying. TRX was rallying, XVG, XRP. It's like, okay, I get it. Because you know, Bitcoin moves and then Ethereum breaks out. And then Ethereum breaks out and then Litecoin breaks out and the other altcoins. That happened up here. We saw a minor version of that here as well, and we most certainly saw it right here on this local top, okay? The local top, which is a double top. Not really, well, it's not a true double top, because in theory, you'd have to break all the way below 30K, and then your measured move would be 0. So I don't see that happening. But you have a shorter term double top, which is in the process of completing. The measured move of that shorter top, that double top is 52K. I'll walk you through that in a minute. But this is a local top. We knew that local top was coming because Ethereum was rallying and Litecoin was rallying after Bitcoin had that mega run and after Bitcoin put in this up thrust. But I'm bouncing around a little bit. I need to kind of stay on topic. I don't want to confuse you too much. How do we anticipate that this was going to happen here? How do we anticipate that we were going to cool off here? Because even here, I mean, I'm telling you, the enthusiasm was like a 9 out of 10. People were going nuts. Enthusiasm was crazy. Why do we anticipate a lower high? Because the price needs to consolidate, and you do what's called an equilibrium. You make a high, especially in this type of a kind of a blow-off move. You come back, you set your low, and then you look for the lower high and the higher low, and now you have this nice tightening range. Gives you something to play, gives you a pattern to play, and usually you'll digest and continue. Trends tend to continue. That's the rule you want to understand, which is why you want to trade with the trend rather than against it, okay? So after we broke above 32K and the price was accelerating in this direction, you're looking left. You see all this resistance. You see all this resistance. And what did we get? We more or less had a retest of that neckline. We talked about the head and shoulders, right? Talked about the head and shoulders up top, shoulder, the head, the shoulders. We did the neckline. Let's draw it this way, more or less that way, okay? What happened? We have what's called a pullback. We talked about throwback earlier, a bullish retest. We had the bearish retest, right? So we had the head, the shoulder, head, shoulder. That's a pretty poor one, folks. Shoulder, head, shoulder, boom. You take the height of the head to the neck baseline. That's your measured move down. We did that. That brought us to around 35K, but it breaks down. It comes back up. It's retesting that neckline, right? That's what happened here. Folks, and by the way, thank you for watching. Hit like, hit subscribe. We hit that retest, okay? So you're expecting it to retest that level and probably initially reject. It doesn't mean it's bearish. It doesn't mean it's going to 20K at that point, but you're expecting it to reject, and then you're looking for your higher low. And where did we get our higher low? Right around that 42K level. Boom. Look at that. Super clean. Really, really clean. What a clean, beautiful chart. And it's not like a crazy chart where it's like, how did it happen? It just makes sense. It's all clean. It's been such a neat and orderly move kind of for the last year, right? For the whole year, it's been neat and orderly moves. So it's not, we shouldn't be saying, wow, I can't believe, oh, technical analysis doesn't work. Well, look at this chart. Gorgeous, gorgeous, gorgeous. Head and shoulders completes, rectangle, break from the rectangle, and then the bullish retest, rejection, and now you're looking for your higher low, and a higher low right at a key level, 42K. Gorgeous, all right? Price bounces, so you're not, now at this point, you're like, I don't know what to do. I'm not in it anymore. I got shaken out. You buy when it breaks up above that lower high at 52K. That happened, and you got yet another entry signal. Now you're long again, 52K. The price is accelerating. Everyone and their mother and their cousin is saying, we're going to hit 100K this year. Well, guess what? I said in July, we're not going to hit 100K this year, and we're still not going to hit 100K this year. I think we'll probably hit it in April at some point, but it's just not going to happen. And the reason I say that is the price has moving so high, so fast, it needs time to digest. It needs time to digest. Give it a little bit more time, we'll get there, all right? But it's not going to happen this year. And we had our breakout, we had our bullish equilibrium on the weekly chart. We had our high, we had our low. Okay, and then we had our lower high and our higher low. Boom, 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 we broke out, right? That's the key level, 52K. I keep mentioning that, 52, 53K. Everyone's watching that right now. I don't know if we're going to get there. But if you use technical analysis, if you use classical charting, why does it suggest that maybe we're going there? Well, we do have a double top here. How do you play double top? Double top is one of those things everyone sees, but nobody knows how to play, right? It's like the head and shoulders, first of all, you wait for it to complete. So first you identify your peaks. Peak, one peak and two peaks, right? So if you just have two tests, it's not a double top. To have a double top, you need a clearly defined trough or a low, okay? And then the price, it's only actionable if and when you break below that low. We've clearly broken below that low. It's a double top, but it's got a higher high. Hey, Ched's not a double top, right? We made that higher high. And hey, Ched's, you were wrong about no new all-time high this year. Okay, fine, I was wrong, but barely wrong. It briefly broke up above the 64K top, and it made this double top pattern here, this local high. We have the high. We paid attention. We did. So I'll show you what happened. Let me slow myself down. Even in this top. So how did this happen? I'm a little excited. I want to slow down and make sure I don't miss anything. I want you to understand how we got here. If you look back to October 21st, Ethereum started to rally. It broke above 4,000. I was getting cautious. There are warning signs amidst all this green money. That's November 9th. That's all the way up here. That was on the second high. But that was because I started to watch back here. Ethereum is breaking out. When Bitcoin is getting ready to consolidate, that's when Ethereum runs. And when Ethereum runs, then Litecoin runs. So I started to watch out for a topping pattern. And we had one forming. Shoulder. Head. Shoulder, right? And then you define that. To make that actionable, you have to define what's your neck baseline, right? Where are you going to act? What's actionable? It's a very clearly defined level of support right at 60K. And you say, I'm going to go short on the break of that. Well, we talked about how to play a fake out earlier. Had you gone short, move your stop loss into profit as soon as you can. And then when the price regained that level, you close your short, right? If you were short there, the short idea failed at that point, right? The short idea failed at that point once you got back up above 60K. And then you could argue bulls had the better end of the argument at that point. You say, no, Cheds, it's not a head and shoulders, Cheds. What is wrong with you? It's a bull flag. You take the flagpole, then you have what's a bull flag, which is a correction after an uptrend. Bull flag, right? Clearly defined falling channel after an uptrend, upper boundary, lower boundary. You probably more precisely would have defined it that way, okay? So how do you know what's the measured move, right? The measured move of a bull flag is you take the height of the flagpole and you extend it from the breakout point. And that would have taken us to about 75, 80K, which is why a lot of really good chart technicians were saying, hey, we're about to go to 75, 80K in October and November. And I don't blame them. I just had the other side of the bet. I had the other side of the argument because I saw what the rest of the market was doing. Bitcoin, Ethereum, Litecoin, BCH, EOS, all this other stuff, right? That stuff was all rallying here, all right? So we had the bull flag that looked like it was going to complete and really started to do it, right? Here we go. Bull flag is completing. We're going to 80K. And I'm thinking to myself, maybe I was wrong. I was starting to kind of rethink my conviction a little bit. And then I saw the upthrust, and I said, all right, we're good to go, right? We established the high. Late October, we broke up above it and came back below. You have another upthrust. Where did that happen? Right back here, the upthrust. We had the upthrust, right? Essentially saying that this is a failed bull flag. It did not complete. And then this day, right? November 10th, remember we had that CPI pump where the inflation numbers came out? And someone said, Chud, you're wrong. 1 million by December 15th. I would love that, my friend. I'd love it. That's funny. And by the way, thank you for all the comments and the feedback. And someone said, Doopy, nothing in your account, your analysis takes into account leverage. I don't care. That's just an excuse people make. Everyone has an excuse. It's just noise. It's just talk. Talk is cheap. The chart filters in everything. Everyone wants to blame the drop in Evergrande or leverage, but there was warning signs way before any of that. It was a natural market cycle. Bitcoin, and then Ethereum, and then Litecoin. All right? It's just, and you had that, all this churning. You were expecting it to cool off. All this price consolidation is in the same area as the April high. So don't tell me it was leverage. That's a weak excuse. Focus on the chart. Stop focusing outside the chart. All right? That's my rant. Anyway, failed bull flag. And then this day we had that CPI pump. All right? I took some shorts right at 68K and then 69K. I rode them all the way down. I still have one open, but I closed most of them here in this chop. I wanted to lock up some profit. But that was a great spot to short because you were already looking at the upthrust, and then we had what's called an outside bar, right? That's another clue that the trend was weakening. Look at this outside bar. This candle, the November 10th candle, the entire range of this candle completely eclipses the candle before that, right? And you can see that. That is a momentum stalling signal. You want to pay attention to that. So we had all sorts of warning signs, both off the chart with what the rest of the market was doing and in the charts. If anybody tells you there was no way to see this coming, feel free to show them this video, okay? So we had the up thrust, and if you went short at that point, which I did, you defined your risk kind of basically at that level. You say, okay, if we get back up above the 60K, 67K, I'm closing my short. Price dropped, and right here was another nice opportunity to short on November 15th. Look at the high of that. Really, it retested, right? It retested that level, broke down, retested it, and flushed, right? So we saw the flush coming. Flush has followed through. And where are we going now? Well, I mentioned a potential double top. So to do a double top, you take the height of the peaks and the troughs, ideally a very well-defined pattern. You take the height from the peak to the trough, you extend that down to the breakdown point. Where does that take us? Right around 52, 53K. Where is that? What a surprise. Whoa, 52 at the lower high. How is that happening? It's almost as if the trading here is incredibly clean. It's still incredibly bullish. And it's almost as if classical charting works. And we're seeing that. It's beautiful. It is beautiful. We are, I don't want to say if we're going to go to 53K, but it really wouldn't surprise me. And what you'd want to do at that point is you'd want to buy the dip. 100% you want to buy the dip. The bullish retest of a prior resistance level you've now broken through and come back and potentially are retesting, okay? That's where we're at. That's on Bitcoin. That's how we got here. I'll get back to Bitcoin in a minute, but I want to do some altcoin coverage. I hope that was helpful for you to kind of walk you through my style, how we got here. I'm loving the feedback. I'm loving the comments to everybody. Let's go to Ethereum. What's Ethereum doing? We talked about a bullish throwback, right? A lot of my trades are based on the concept of buying the dip in an uptrend and ideally a very well-established level. That's the high. That's that September high, and then we have that low here, right? That October low. So you have the resistance established. You kind of churned a little bit, did a little bit of that inverted head and shoulders type of action. You broke out, hit 4,300, came back to 39 and bounced. What did Ethereum do again? Bounced off it really nicely 2 days ago. All right. So what are we thinking on Ethereum right here? Ethereum is still incredibly bullish. We have a rising MA200. All right, you have the price still trading above the MA50, right? The 50-period simple moving average. It has relative strength to Bitcoin. Bitcoin's trading below its MA50, right? So we're not bullish on Bitcoin until we're back up above the MA50, right? That's number one, right? We're not bullish on Bitcoin till it's back up above the 60K level, till it's flipped this EMA8. So we'll keep that in mind. But Ethereum, we say, okay, Ethereum still looks pretty good. This looks like a very nice buy the dip level. And as we go through the altcoins, the ones I'm going to cover, and I'll take your chart requests, we're going to kind of look to see which ones are above not only the May highs, but which ones are above that 50-period moving average, right? So Ethereum is above the 50-period moving average. And more importantly, in my opinion, it's above that key horizontal. That's our horizontal momentum level, the high from early September and this low from the end of October, right? That's what we're looking at. So what's Bitcoin? What is Ethereum going to do now? We're not quite sure, but we want to see it flip back to EMA8. We want to see it flip this level back into support, really that high from early October. But if I was to pick one between Ethereum and Bitcoin, I'd want to play Ethereum because it has relative strength, right? You have limited funds and you have limited time and energy, so you should focus on playing the altcoins that have the most strength. You want to focus where strength is and you want to attack those charts. I would be playing Ethereum rather than Bitcoin. And we'll look at that here in the Ethereum Bitcoin pair. ETH BTC, what does that mean? It just means Ethereum versus Bitcoin. We have a rising MA200. That's an uptrend. We have the price trading above that rising 200. That's a confirmation of that uptrend, right? So Ethereum looks to continue to outperform Bitcoin as it has been for quite a while. I would play Ethereum over Bitcoin. Here we have Litecoin. So Litecoin, it's okay, but it's not. It's below the May high, right? We have the May highs, May 20th high, rejected here. Walmart pump rejected, 225, 230 level, and then we had this breakout above and the flush below. What's that? That's an up thrust. That's a bull trap, a false bull break. So if you're short on Litecoin, you had a really nice opportunity to go short here at 230 on the 230 break. But if you want to go long, you can sit on your hands and wait for the price to reclaim that level. If Litecoin gets back up above 235, I think it's quite reasonable for you to go long on Litecoin at that level. But until then, there's much better stuff to play. We're going to cover some of that in a minute, right? But if you look at Litecoin, Litecoin is still not back up above that May high. That's the level you want to look at when you're playing alts. So I'd rather play Ethereum than I would rather play more so Ethereum than Litecoin. Here's Sol. Sol's a beautiful chart, a very strong and steady uptrend. Okay, and you've been looking to buy dips in Sol. Where has been a really great buy the dip level? MA50, orange line, MA50, MA50. Did it right here as well. Now, is there going to be follow through? Is it going to rally and make a new high from here? I don't know. But what you want to understand is in a trend of this strength, oftentimes the first time you touch that moving average after kind of a reasonable period in time, you're probably going to bounce off of it. So we bounced off the MA50, and now we want to see it flip this horizontal. What's a horizontal? It's the heights of this pattern, the heights of this consolidation area, and the lows of this consolidation area. So you see, yeah, we bounced off the 50, but we're initially rejecting here at 220. Why is 220 important? We had the thesis of an ascending triangle, right? What's an ascending triangle? Let's see if I have it for you. In my notes, triangles, ascending triangle. You have a clearly defined horizontal resistance and a rising demand, okay? So we had a rising demand level. What's a measured move? What's your target? So when you break out, as we did back in November 3rd, you take that height of the triangle, you take the height from the resistance down to kind of that rising demand, and then you extend it from the breakout point. So, 315, 320, depending on how you want to draw that, right? So this, we were thinking, all right, ascending triangle, trends tend to continue, Sol is bullish, Sol's going to hit 320, 330. Kind of only got to about 250 and rejected. And that made sense because we had a lot of market weakness. This is kind of, I believe, when Bitcoin started to cool off, or roughly about that level. But even though it was cooling off, you're still buying the dip at 215, 220, except now we're below it. So that's the level we want to see flipped back up. If you're short on Sol, you know when to close your short. All right, it's not complicated. You're above 215, 216, you go long again. So you want to see, the bulls want to see the price up above that level on Sol. Let's just take a look at the chat room. I want to say hi to everybody. Please hit like and subscribe. I'm going to scroll up a little bit and try to get caught up. I've been kind of ranting and raving here for a while, so thank you for bearing with me. I appreciate all of that. So let's do a couple requests. I'm just going to bounce around and see what's first requested here. Can you do, let's see, Mark Ochoa. I think I recognize that name. Can you do Atom and Algo? So let's see if I have those. I have Algo here, and I can add ATOM. I don't know if I have it right there. So what's going on with Algo? Algo on Kraken. It's a pretty decent looking chart. You've got the MA200 rising, and look at this consolidation. So what I see, and you want to train your eyes to look for kind of our levels respected. You have resistance, pretty clearly respected and turned into support. So you have a nice long consolidation in Algo. It's respecting that level, that $1.60 level. The one thing I don't like, look at this candle, right? Look at all that profit taking. You attempted to bounce, right? You had the breakout. You broke that lower high. You broke this prior high, but you gave it back. So something happened here. There was kind of an artificial pump, and the bears rejected higher prices. So that's a little bit of a warning sign for me, is the fact that it gave up all that. That's a really nasty candle. It gave up all those gains. So yes, it's an uptrend. And I think definitely as long as we remain above 160, I would be strong. I would be constructive on Algo. But I would be concerned by that upper shadow candle. You had requested ATOM as well. I think I have it here, but just for fun, let's pop it up. Adam, ATOM. Yeah, it's, did I just look at the same chart twice? It kind of looks like Algo. I want to make sure I'm not going crazy here. There we go. It's kind of the same thing. Look at that. It's the same type of action where you've got this initial resistance, and for the moment, it seems to be respecting it, right? Um, but we've got some pretty sharp weakness here. Look at that pretty sharp drop. We do have kind of a loss of support from the, where initially it found support. It looked like it was breaking out, right? Looked like it was breaking out. You had the diagonal break, and then you had kind of the horizontal break, and it failed to hold it. So you have a failed continuation breakout. It's still kind of a buy the dip type of situation. On balance volume is strong. RSI's cooled off. I think with this one, if we touch the MA 200, I'd want to buy there. Look what happened the last couple times. Bounced off of it, bounced off of it. I'd want to buy this probably at the MA 200. That's where I might give it a shot. Let's check out the Rune Stag Spots. Once Rune, I think that one pumped yesterday. Saw a lot of people talking about Rune. Let's check it out on Binance. Rune. Okay, I'm kind of a gamer, so I always think of Rune like Secret of Mana or whatever, some type of a game, right? Like Zelda or something. Rune gets my Dungeons and Dragons roots going. So yeah, it's okay. I mean, it's not like I'm rushing out to play this chart. I definitely see it. I think it's in decent shape. I definitely wouldn't call it a downtrend. It's bouncing off trying to bounce off the MA 200. What I'm observing is the high here from May. I'm observing now we have a lower high, right? And then what I see here is we lost this level. Rejected, broke up above it, held it as support, and lost it. So bears currently have the edge in this chart. There's no question. I saw there was like a news event. Like, I don't care about that. Like, stop paying attention to hypey news. If news is important, you're going to see it in the chart. You'll see it show up in the momentum. That's why it pays dividends to pay attention to the price action and to let that guide you, okay? So we're bouncing off the MA 200, but we're below kind of a key pivot level. You really want to see the price back up above that kind of 1220 level to be a little bit more confident. Let's see what else we hear. All right, my friends, I'm going to scroll up and see what else I missed. ADA. Someone had requested ADA. I'm actually short on ADA right now. I have a short working. What's going on with ADA? So ADA initially, the reason why I'm short is it looks like we're flipping this MA 200 into resistance. It's definitely, overall still an uptrend, but I'm looking at a short trade. We had the head and shoulders that played out in the opposite direction, right? The shoulder, the head, the shoulder. And you look at a head and shoulders, obviously you would have waited here to complete. It didn't complete, but you look for your failure point. The failure point's a buy signal. Right shoulder was broken at 150. That suggested that was a failure of that pattern. And we went 150 to 3. An amazing move, and it's just been consolidating. It's just been kind of churning, which is fine. And while it's doing that, we've been watching that MA 200 because it's held that, it's held it, right? Look at this. We're going back now. We're going to the way back machine, right? September 20, look at that, held it, right? MA 200 held it. Brief dip, but held it. It looks to my eyes, we are rejecting at the MA 200, right? Especially given the climate, especially given kind of the weakness we're seeing in Bitcoin right now. I think we'll probably see, this go a little bit lower. But you also want to know where your idea would fail. So like for me, I'm short, but if we get back up above, $1.90, I'm out, right? I'll say, okay, I'm closing my short. I'm not necessarily going long. I'd probably want to see this above that level to go long. I want to go long above right about 240. I'd also be interested in going long on ADA at 150, right? So whatever charts you're playing, they should be charts you've been watching. You want to play whatever you've been watching the most. That way you'll understand the price action the most. You're most comfortable with it, and you know the levels that make sense. So when the market flushes, you don't panic, right? That's what's important. You really don't want to panic, okay? So there's ADA. Let's take a look what's going on here. Caesar, thank you, brother. That's very nice. You guys don't have to super chat me. I do this for fun. I do this. I'm trying to grow my account, of course. It's not completely altruistic, but I don't need the super chats. But thank you very much. You guys are super kind. So Sidharth is requesting AR Weave. I think that's AR, right? Let's check it out. Chef, thanks, brother. I'll take a look at that for you in a second. AR weave. So yeah, it's clearly a bullish chart, but look, this is from a request. I've covered this on Bitcoin Live quite a few times. Look at the height. Look at the bottom, and look at the top of this like horizontal range. The price broke up above it and came back, and it didn't hold it. So I might even be looking to short here in a little bit, right in that level, right around $70. The chart's strong, but we did not hold that level. So, if you're in it, I wouldn't necessarily take profit, but I'd watch this price interaction with that level. Bulls really want to see it back up above really $67 to potentially continue that trend. We're definitely seeing a little bit of short-term weakness. Shaft, you requested good time to short XTZ is the question. XTZ has been really a laggard. I wouldn't short it here. Like, you want to short strength. This is just bleeding. It's super bleeding. Like, you might even be looking to go long at the MA200. Like, that was a reasonable thesis. It was your first bull thesis, right? The first time it touched the MA200 since, September. But you don't necessarily short here. If you want to short it, you want to be shorting up here after a bounce, right? So maybe like it bounces, then you'd look to short around like 680. You'd short when it hits a resistance level, or maybe even right here. You can see where the price rejected right around $6. You could short there, but you don't short here. You don't short right when it's bouncing. It's not that much of a bounce yet. It's still kind of flushing down. You want to short strength rather than shorting weakness, because your timing will be off. You don't want to step in kind of the middle of the trade. You want a very clearly defined level. So that's what I'd say. And what's Hero? I love all this stuff. I've never heard of this one. Meta Hero. Okay. I mean, look, there's no price history here, so I can't really tell you what to do with this. You've barely got 20 candles. So is this a good time to long Hero? I don't know. There's no way to TA this. There's not enough price history. So I apologize for that. I'd say, maybe you want to buy a little momentum. So if you get back up above, 13.5 cents, maybe you try there. But there's really not enough price history. DOT was requested. DOT by Kusama. Let's check it out. DOT. I have DOT here. DOT's been really strong, and look at that. So look at this key horizontal level. Highs of September, lows of late October, and then kind of lows here in November. This is a buy the dip level. It's definitely threatened. It's definitely a threatened uptrend because the price is trading below the MA50, and that's been an important support level. Now, it did trade below here briefly, and it rallied within a few candles. That's what bulls are hoping to see happen right here. But, those moving averages and kind of the price interaction with the moving average is a little more subjective than kind of a clean horizontal level. So this is your clean level. This is a resistance turned into support, You want to see this held, right? If you're not in it and you're looking for some type of a momentum signal, sure, you can draw your diagonal line, but you want to wait for a little bit more confirmation. I would say right back up above there. So if you're not in it, wait for really I would either buy like at 39.40, 38, 39.40, or I would buy like, here at 48 with some positive momentum rather than kind of get chopped around here in the middle. Those are my thoughts on DOT. Let's see what else is going on here. You're welcome, Kusama. Majita has requested CRV curve. That's been a popular one. I've seen that talked about quite a bit. It's a pretty decent looking chart. We have more or less an uptrend. It's choppy though. We don't have clean levels in this chart. Other than kind of looking at, maybe I'll go weekly a little bit. And you can essentially see where the price is rejecting initially, right around 350, right? Rejecting, coming up, rejected again. Look at that, the week of September 30th. Broke up above it, now we're consolidating. So in terms of a bullish pivot level to kind of know if bulls have the edge, MA50's held nicely, okay? And that level right around 350. That's what I would keep an eye on. Let's do a couple more here. And then we'll wrap things up. I love having you folks here for these webinars. They're very rare, so I try to put my best into it. Let's see. Lena is requested by Angela. Angela. I know I have Lena somewhere on here. There it is. So what's doing Lena? Lena. I mean, it's not a great looking chart. I'm not going to lie to you. It's hard to be constructive on Luna given that we're below that kind of August high. You see how the price established that resistance. We broke up above it. We kind of initiated, a bull trap at that point, and we broke back below. So I think I would be cautious in this one. I'll be very careful. And if we break below that level, 4 cents, 4.5, I would probably look to exit. So you want to think about, if you're in this trade, what's your stop loss, right? If you think it's bullish, where would that stop loss, where would that thesis fail, and you would know that it's headed in the other direction. Luna was requested by Sheer Ponage, which is a great name. Let's see. So Luna's bullish. This is relative strength, right? Like you want to always focus your funds in the direction of relative strength. We have a nice, solid, strong uptrend. Beautiful, really strong all year. It dropped with Bitcoin, of course, but then it broke out really nicely, and it hasn't really looked back. And it's continued to put in higher lows, low, a higher low, higher low, a higher low, and even here still a higher low. So you have a very, very clean structure on Luna. We're consolidating below the MA50. That is concerning, of course. So we want to see that flipped back up as soon as possible. But you can see right here, it's kind of the level I really would want to see held as a bull, 34.35. Luna is one I have on my watch list. If the market flushes again, if the market goes down one more leg, I'm looking to buy Luna. That's one I want to play. And maybe even MA200. It's crazy. It's here at 24 now. Maybe it's at 28.50 at some point. That's one you want to buy. You want to buy on a flush. I'd say Luna is definitely one you want to buy on a flush. Saeed requested Mana. Let's take a look at Mana. Yeah, it's a nice bullish chart. You saw that beautiful breakout, and then it needed to consolidate, right? It consolidated, diagonal break, and then you got kind of that horizontal break there. Boom, came back, a little bit of a retest and continuation. So if you're not in this, I think you look to buy right around 370, or maybe even that rising green line, that rising EMA8 support. It's clearly a bullish chart. I don't know that it's going to punch right through resistance. I mean, because even now that's pretty high above the upper Bollinger Band. That would be a little bit overextended. But this is one you want to buy the dip, whether it be MA20, the brown line, the EMA8, or one of these horizontal zones. I think this is one you want to be buying the dip on. Can you do AVAX, sir? Sure, I'll do AVAX. Tushar, happy to it. I mean, look at this thing. This is a definition of trend continue. This thing is unbelievably strong. So whatever altcoin you're in, and especially if your altcoin sucks, you should have been playing something like this. Play something with strength. Don't just stick around with your money in an altcoin that's not doing anything and just going sideways. You're wasting your time. You're wasting your money. Find strength. It doesn't mean you just ape in, but if you had just bought the green line, the 8 EMA, you would have done really well. And here when we had some market panic a few days ago, look at all those chances you had to buy around $92, right? The price established resistance more or less in that area, right? We broke out, came back, broke up again, came back. This has been giving you a chance to buy. You buy the dip in this chart, right? If the market really flushes, really flushes, $80, put a bid in right now for $80. It's probably not going to fill, but if it does, you're buying the dip in a very strong uptrend, and it will likely bounce from that level. So it's a beautiful chart. It looks to continue. There's no resistance. I could go back left as long as I want. There's no resistance. It's just a gorgeous, gorgeous, gorgeous chart. So I'd say congratulations to anybody who's in that. And looks like Bitcoin's pumping. All right, this is fun. So Bitcoin, a really strong pump in the last few minutes. I'm glad I'm wrapping up here with Bitcoin. Let's take a look at that. We'll go back to that 1 hour chart. We're seeing the price getting right back up above kind of a key short-term pivot level. So what's that mean? So when the price was consolidating here on Bitcoin, we established our low, right? We established our low right around 58.6. Look at that low. Look at that low, right? And by the way, thanks to the chat room. Thanks for alerting me, guys, that Bitcoin was pumping. That allows me to kind of cover it a little bit. So you can see how that low was established. And then when the price dropped below it, that's resistance, right? That's resistance. That's resistance, all right? And kind of came back, flushed again, and boom. Look at that, 94.6. So we're seeing some strength right now If you're long Bitcoin, you go long on that break 58.6 area, but that's your risk. So if you're buying here, if you're aping in, which I don't recommend, but if you're aping in here, pay attention to that 58.6 level is kind of your key pivot, right? So you have a short-term bounce. What does this mean in terms of the larger consolidation, right? We're bouncing right back to that MA50 potentially. We want to see the bulls close back up above the MA50. That's the key pivot level. We've talked about why. We talked about how it confirmed the bounce at 35K. We talked about how it was a warning sign back in April of this year that the trend was weakening. And right now we have the price had tested it and initially really should have bounced here. We had a nice, beautiful potential tweezer bottom here. And it really should have bounced, but it failed, right? We had the failure, another leg down, and it's bouncing again. So we're going to watch to see the price interaction with this moving average. If we close back up above it, I think you're safe to go long, all right? But we're heading into resistance as well. We're heading into the low of this consolidation channel at 60K. We're heading into EMA 8, potentially resistance. So is this just what's called a relief rally or a mean reversion bounce? Is this what we're doing here? Is this what we're doing here where we come down and we're just bouncing back up to the, to the retest? Is that what we're doing? We'll have to see, right? But our job as a chart technician is to identify the trend and look for key levels in that chart, which will suggest either the trend is strengthening or the trend is weakening. Sunriser, you'd asked a book about candles. Right here, this yellow book, Japanese Candlestick Charting Signals by Steve Nissen. That's the one that you want to read for candlesticks. I also have a chapter in my book on candlesticks. So that's it. Your job as a technician is to identify the trend and look at levels in the chart, which would suggest either that trend is strengthening or weakening. So we're going to watch that interaction for Bitcoin with that 60K level. We're going to take all the things we've learned today, all the lessons we've learned today about our moving averages, about our key horizontal levels, about how to structure our risk. We're going to take that and we're going to go forward with more strength and more confidence in our trades. A few words of wisdom here. Reduce your watch list. All right, watch fewer things. The fewer things you watch, the better you're going to know the chart, and then you'll have a better chance of executing a successful trade off of that play. Structure your risk accordingly. So when you enter in something, and if you enter in somewhere because of something that has happened, that's your reasoning for exiting if it fails. What do I mean by that? So if you're here and you enter on this day, the 8th or the 9th, because it broke up above that October 20th high, when it fails and it comes back below your trigger level, cut it, right? When your trade idea fails, cut it. Take a small loss, right? Refusing to take a small loss will often lead to the opportunity to take a big loss, to refuse to take a big loss. That's one of the quotes in my book. I love that quote. Define your risk, right? Manage your risk. Trading's so hard. Oh my God, it's so hard. You just want to bang your head on the table all the time. Do yourself a favor, watch videos, read textbooks, and be patient. Use your trading log, your trading journal, write down your mistakes, and, monitor your emotions too. I talk about if you enter a position, if you enter a long, you enter a short, and then you immediately feel uncomfortable, you've got too much money in that play. Enter with less money. Try smaller amounts. That will help you get to where you want to be, all right? I am Big Cheds. I'm on Twitter. I'm at Big Cheds. I love doing this. I love interacting with you. I try to reply or respond to almost everybody who talks to me. It's a lot of people, but I have a lot of fun with it. I've talked about the book. I am the author of Trading Wisdom, 50 Lessons Every Trader Should Know. I'm incredibly proud. Of doing that. The book, I've had wonderful, wonderful feedback from you folks. It's just been a blast. And, if you can't afford by the way, the Audible version of the book is coming out in, like a few weeks. I'll have it by Christmas. If you can't afford the book, I've got you, right? I have the free version on my YouTube channel, Cheds Trading. Hit like, hit subscribe, go to the playlist, Trading Wisdom. I do one lesson at a time. I'm going to do lesson 9 on Monday, the lesson in profit taking. I also host a weekly show on the Crypto Banter YouTube. Definitely subscribe to their videos. Look for my playlist, Trading Wisdom. I have guests, technical analysis. I read lessons from the book. There's got 11 episodes by now, so go ahead and binge watch those. But if you really want to learn, if you're really serious, you want to learn technical analysis, sign up for Bitcoin Live. I do these videos twice a week. I do 2 long-form market updates. I cover cryptos, Bitcoin, Litecoin, Ethereum, all the major coins. I take all your altcoin requests. I reply to everybody in every comment, and I really enjoy doing it. I've been doing it for more than 3 years. I have hundreds of videos you can watch. Definitely check out Bitcoin Live. The details are in the video description, and you can see it on Twitter as well. So this has been super fun. I hope you've enjoyed. I hope you've enjoyed it. I definitely haven't replied to every comment in the video here because there have been so many comments. Just 500, 600 of you people watching. I think that's fantastic. So I just can't say thank you enough. Thank you for doing this. Thank you for being here with me along this journey. And, I hope you folks are doing well. Hope you're staying safe. I hope you're having fun, and I hope you're making some money. So until next time, we'll talk soon, all right? Peace out, brothers. Here's the music.